Today, I am going to talk about what to do if you sold all of your stocks in 2020. Now, the hard part about getting back into the stock market, especially after it's had a big run up like we've had over the last 12 months, is that you just sort of feel paralyzed. Most people, when they sold, especially in March or even April of 2020, when stocks were, uh, down 30% for the year. It was a really scary time. The world seemed like it was coming to an end. A lot of people panicked and they sold. And so you feel like when you get to this point after it's already had this big run up, you feel like, okay, well, I don't know when I'm going to get back in. I don't want to get back in because I made a mistake selling on the downside. And I know I'm going to make a mistake on the upside again because as soon as I get back into the stock market, it's going to crash down again. So I've watched this happen. I watched this happen back in 2007, 2008. A lot of people sold and they sold when it was ugly, when, when the stock market had already dropped maybe 20, 30, 40%. And then they sold at a very low point, which of course is the opposite of what you want to do. And then they sit and they wait and they wait and they wait and they wait. And what ends up happening, and this just happened with COVID, is that the stock market bottoms at the time when it doesn't seem logical that it would have bottomed. The stock market bottomed in late March of 2020. At that point, the infections were not under control. The entire country was locked down. There was no actual reason why that day would have been the day that the stock market should have bottomed and turned around again. But inevitably, that's what happened. It happened in March of 2009. Stock market bottomed well before the economy recovered, well before there was even a glimmer of hope that the stock market should have even bottomed. So it's very difficult to get back in after you sell. And then there's the psychological component as well. When I talk to clients or people, employees in the 401k plans that I work with, if they sold and they sold at the wrong time, I can tell you there's a lot of guilt associated with that. There's a lot of shame. There's a lot of anger and stupidity. These are not my words describing them, it's their own. They feel really awful that they sold when they did. They feel stupid for selling when they did. They feel shameful about it. And they feel like they've like wrecked their entire portfolio because they know if they would have just held on, their portfolio would be worth maybe double what it's worth today. But instead, they locked in those losses and now they feel terrible about it. So it can be the bottom line here is that if you are not invested in the stock market, or even if you're underweight in stocks, you don't even have to have everything out of the market. But like, let's say you sold some, or you're not where you should be in terms of how much you want to have invested in the stock market, or how much you need to have invested in the stock market. Why would you want to invest now? As I record this, the Dow Jones Industrial Average closed at over 33,171 today. This is late March 2021. Stock market's never been higher, and it seems like a stupid time to invest and add to the stock market at its all-time highs. So the bottom line here is it's very paralyzing when you've been out of the stock market or underweight to then get back into the stock market, especially right now when it's at all-time highs. But it's important that if you are underweight stocks, a little or a lot, that you don't sit on the sidelines and continue to make the problem worse. So today, what I want to focus on are two strategies that you can use to get back into the stock market to the percentage in stocks that you should have. It doesn't mean that you put everything in the stock market, but if you should be 60% or 70% in stocks and you're 30% in stocks or 0% in stocks, today's video is going to help give you the tools that you need in order to get back into the stock market to the percentage in stocks that you really should have for your age and your stage in life. All right, so let's get into this. But before I do, if you're finding this video helpful so far, would you give it a thumbs up, hit that like button, and let me know that you like it, and I can make more of these as well. So strategy number one is wading into the pool. So this is, you're dipping your toe in the water, you're moving in the shallow end of the pool. And let me just use a example to illustrate how this works. So let's say you have $1 million portfolio, and right now you are 20% in stocks, but you really need to be 60% in stocks. So you have 200,000 of your $1 million portfolio that's in the stocks, but you need to get up to 600,000 in stocks. So there's $400,000 that you need to add to stocks in order to get back up to your 60% target mix of stocks and bonds. So how do we go about moving 400,000 into the stock market, especially when it's trading at all-time highs? Well, certainly not right now. We don't want to necessarily put it all in right now. You might feel silly and foolish. It might make you scared. Like if you were scared and got out of the stock market last year, it's probably going to be terrifying for you to just push all your chips back on the table and put everything in at one time. But again, we don't want to sit in cash longer than we need to, especially when cash is earning nothing. Okay, so the most common suggestion I have for a client who's in this situation is that they do so gradually, i.e., wading back into the pool. And that could be over a period of 3 months, 6 months, 9 months, 12 months, that we go from 200,000 in stocks to 600,000 in stocks. I usually don't recommend going past 12 months to get to the point where you are fully reinvested. Because it takes a really long time to get there, and I just don't think it's a good idea. So the important thing here is that you decide on a time frame though that you're comfortable with. If you want to get back invested quickly, go for 3 months. If you want to get back invested in 12 months, go for 12 months. If you go beyond that, chances are that you're going to be sitting in cash unnecessarily for too long. 70% of the time in a calendar year, the stock market is going to increase in value that year. So every day that you spend out of the stock market is one day that you're not potentially increasing the value of your portfolio. And the likelihood is that it will go up in value over the next 12 months compared to it going down in value. So here's what I like to do. First of all, we got to get a meaningful amount of money invested right away. Maybe you invest half of it right away. Maybe you invest a third of it right away. Whatever that is, it should be a meaningful amount that we put back into the stock market right away. And then for the next 3 to 12 months, again, decide on the time period in advance. You're going to evenly sprinkle in the rest of the money that needs to get invested. And it's going to be done systematically. You're not going to choose the date. You're just, no matter what the stock market is trading at that day, you're going to invest that money on, say, the 15th of every month for the next 6 months. You just do that every same day, every time. And that way you don't get scared if the stock market has a bad day, or you don't wait on the sidelines for longer than normal if the stock market's doing really well. You just robotically invest the money. And that's how you get back to the target allocation that's so important. Okay, so that is my preferred strategy. Determining your ideal mix of stocks and bonds, we got to do that first, and then determining the time frame, not more than 12 months, and then putting it on autopilot so that you get reinvested over that time period. Now, strategy number 2, way easier. We're just going to jump right into the deep end of the pool and invest everything that we need to get reinvested back into the stock market, invested at one time. Now, as I mentioned, the Dow is over 33,000 as I record this. Not exactly the most palatable time to be getting back into the stock market, but it's an amazing place to be if you've stayed the course. So a scary place to be, though, if you're going to jump in. But here's what I want you to keep in mind is that, as I just mentioned, statistically, about 70% of the time, stock market's going to go up in any given calendar year, especially right now with the economy projected to grow. Even though it's at all-time highs, there's no reason to think that, we're going to just fall right back into the Dow dropping in half or something like that. So I think, no one can predict the future, but I actually think it's kind of a low risk time to be investing a large chunk of what you have back into the market where you should be. As long as you still believe in free market capitalism and that the US economy is worth investing in for the next 10, 20, 30 years, I don't see the point in sitting in cash longer than you can stomach. So if you can stomach putting all of your chips back on the table at one time and reinvesting fully in one fell swoop, then I suggest that you go ahead and do that because it's easier, and you're going to be fully invested for a longer period of time. A wise person once said, it's not timing the market that matters, it's time in the market that matters. All right, so thank you so much for watching today's video. If you like this video, be sure to check out my podcast, The 1 Minute Retirement Tip, where in just a couple minutes a day, I give you little nuggets of retirement wisdom to help you on your journey to retirement. And of course, if you like this video, please give it a thumbs up and comment, ask your questions below, and I'll do my best to answer them. Thank you so much for watching. My name is Ashley Michike, and I hope you have a blessed day.